Give me a
Fabulous. We're fabulous.
Fabulous. Good. I see a lot of new friends on the faces that are popping up right here. So, hey, welcome. If this is your first All Partners meeting or your first stats class in particular, buckle up. We're going to have a lot of information coming very soon. So we're going to start with some fill up buckets. This is an opportunity where we get to show gratitude and just thank people for what they're doing around us and for us. So let's kick it off. Who wants to fill a bucket first?
Hey, Jay, I'll kick it off. This is Frank.
Hey, Frank Ramirez.
Reach out and thank Heather, Jesse, anybody else that's involved in command. They've been doing a fantastic job.
Awesome.
Absolutely.
I agree. Hey, everyone is hustling. So it's always fun to turn the battleship, right? So we're doing a good job. Way to go, Heather. Thank you. Thank you, Frank. Who else? Who else would like to fill a bucket this morning?
I would like to thank Tess Price for accompanying me on my very first listing down to Sierra Vista East.
Oh, nice. Is that, Teresa, is that you?
Yes, it's me.
Perfect.
Yeah.
That's lovely. Way to go, Tess, and way to go, Teresa. All right, so the question is, did you get the listing?
Yes, he is going to be signing, and he's a disabled retired vet, and he also needs to find a place to go first. So he was a little reluctant to sign. However, I did explain the exempt delay, but he still just wanted us to help him find a place first. So Tess is actually helping me with that as well. She's got some contacts in the areas that he really wants to be. So
awesome. Very good. Way to go. All right, two more fill a buckets. Who's got buckets to fill?
I'm under contract for my first time.
Who's that?
Moraima.
Oh, nice. Way to go. Congratulations. That's fantastic.
Thank you. And I'll actually be getting a referral because my buyers are selling their house in Ohio. So I found an agent for them there too.
Boom. The power of the referral network. Way to go. Good job. Way to go, Marima. So your fill a bucket is to your clients. So that's excellent. All right, one more. Fill a bucket, please. Who's got a bucket they would fill this morning? I'm looking at all your pretty faces. You guys are a good-looking group of agents. Let me just tell you. Going once. Going twice.
That we can all agree that we all want to fill your bucket because of your positivity and your energy every morning. Right, guys?
Right. I so almost said that for Jay, Allie. So thank you for stepping up, because I always hate it when staff is the only ones doing it and give the
for
agents
handling the awkward silence while we
Yeah, there you go.
the bucket. Thank you.
No problem. No problem. I'm used to silence from you, Allie, because I'm not cool enough to be in your club. So that's perfect. All right, guys, let's move forward. We want to give Aaron as much time as we've got. I think I saw Colleen as I was flipping through. Colleen, do you have anything you want to address about title?
Hey, good morning, everyone. Just a quick note, I know you were short on time, is to remember that Title Security now has the ability to take pictures of the earnest money check. Know what that program is about, please reach out to Tricia Hooper or Jessica Alvarez at Title Security. You can always reach out to me too. Thank you, business. And I think that's about it. That's about all I have. See you guys tomorrow at Mastermind.
Awesome. Thank you, Colleen. All right, Debbie, you're up. Tell us what's going on in the lending world.
Well, good morning, everybody. And Jay, major bucket fills for you. You're awesome. We had a great class on Friday. What is IntraLend? How does Fairway work? How does your lender work on it? So we had a great class on Friday, and we'll have another one coming up. But I just wanted to say thank you very much. Rates are low. A lot of hoops you had to jump through. Fannie and Freddie are taking some down as COVID kind of continues. So a lot of regulations, credit scores that were stringent, they've loosened some restrictions up a bit. So look out for those. Ask me if you have questions. And remember, you guys are a scrappy sort. Fight for it. You guys are awesome. You're getting those listings, getting those buyers. I'm proud of all of you. Have a great day.
Awesome. Trisha, did you have anything you wanted to add? I think I saw your hand raised.
You know what? I did. I was just putting in the chat. I just wanted to say one of the things I'm finding with the direct depositing of the earnest money is before you need it, put the Zocom app on your phone. It's a Z and a green box. And that way you can play with it a little bit. You can create your account so when it's time to use it, you're ready to go.
Awesome. That's a great, if you'll add that to the chat box, that link, that would be fantastic. Excellent. Thank you, ladies. Appreciate it. Thank you, Debbie, for that information. And I hope that we continue to grow the Intraland group. All right. Next slide, please.
That's it. And now it's Aaron.
That's it. All right, Aaron Wilson. Hey, I want to fill a bucket, and I want to thank Aaron for giving of his time and his talents, not only to study through this, but then to take the time to come alongside and teach all of us. And I think it's a unique piece of our culture, right? It's a unique piece of our culture that an agent would take their time and their efforts to spend to help educate everyone else to help them grow their business. So thank you, Aaron. I really appreciate it. One more plug before I give the mic to Aaron is at 10 o'clock today, right after this meeting ends, during Ignite, you're going to hear from Josh Berkeley teaching about negotiating the deal. So you're getting double barrel trainings, high level training. So make sure you jump to that. Aaron, the floor is yours. I appreciate it.
Well, thank you. I got one last gratitude piece. I'm thanking the AC guy for coming out today, hopefully, because it looks like I'm in a sauna. I am in a sauna. I'm sweating to death in here right now. I'm actually want to turn my video off to kind of keep the processor speed lower to actually lower the temperature in here as well. But no, all seriousness, thank you, Jay, for what you do. Seriously, you're a good man. All right, let's talk about some stats. What in the world is going on out there in this crazy times that we're in right now? All right, sounds great.
Not enough inventory.
Not enough inventory. All right, talk to me about that. Why?
Because people don't know what they can get for their home yet.
Okay.
People feel unsettled.
Yeah.
I think,
People don't want to list it.
yeah, we're seeing a continuation of people staying in their homes longer with what's been happening in the world around us over the last few years. In my particular neighborhood, there's 11 houses on this cul-de-sac. 8 of them have people that have been in it for 30 years or more in their home.
Interesting. Do you think they've become a lot more, I guess, keen, smarter, understanding that a property can actually be an investment?
I think everything about real estate, over the years, they think a lot of these people have educated themselves, and their financial situations have just dictated it's probably easier to stay in the house they're in than move.
Okay. So this is a question to everybody right now. Why do you think that buyers are buying right now? I mean, heck, we're prices are at an all-time high right now.
Low interest rates.
Rates are low.
Because rents are also at an all-time high.
Okay.
Always.
I like that. And here's the thing. There's no right or wrong answer. I'm looking for something nobody's hit on yet.
People want to relocate from places they don't feel settled. It might be too crowded. It might be too expensive, and they want to find a better place to live.
Okay.
There's also a lot of companies moving to Tucson right now. You've got some major employers not only bringing whole divisions to Tucson, but moving to Tucson.
Why do you think that is?
We got lower expenses. Cost of living is excellent here.
And the housing market is still below the rest of the country. So it's made, for a company's employees, they're getting in, they're bringing them to a town or bringing in people to a place where it's also more affordable for them.
Okay. So what is everybody experiencing right now out there? Multiple offers?
Yes. Like a dozen.
Multiple offers, appraisal issues.
Appraisal issues?
Multiple offers.
Buyers.
The appraisers are trying to keep a cap on the spiraling increase in the values so that they don't look at another 05, 06, 07 crash.
Is Juliana Contreras on right now? I don't know if she is or not. What is one of the new home builders, Lennar in particular? What have they done just recently? Does anybody know?
Moratorium on building. They're not taking any more contracts.
Okay, let me let that sink in a minute. Why would a new home builder do that? Why would a new home builder not build any more dirt start homes throughout the end of the year? Why would you do that when you're in a market to where inventory is at the lowest level possible? Literally, they have the land to do it. Why?
Their capacity.
Well, money too. The cost to build something is so incredibly high that they can't justify building something at the cost of what it costs to build it, to keep the appraised value of what it should be. So they're kind of fighting their own battle.
Michelle, you nailed it right on the head. There was a 63% increase in lumber.
Right.
So what happens to profits when these things like this happen?
And there's no margin.
There you go. So here's the thing.
Concrete's expensive too. Concrete's gone up. Everything has gone up. So they can't build an affordable home and keep costs at a level where they can sell it.
So what do you think that's going to do to pricing?
Increase.
Okay. I'm not saying it. You guys are saying it. Does it matter what the interest rate is?
It will eventually.
It will eventually, but it doesn't matter right now.
No.
So if you're talking to buyers right now about the interest rate being low, I think what you might want to look at is what's the emotion? They're buying off of emotion, not interest rate. Interest rate is logic. It's logical to buy because the interest rate's low, but that's not why people are theoretically buying. They're buying because of the emotion behind it. I forget, somebody had mentioned, you know what? They're moving because of the feeling behind it. That's probably the conversation that we should be having in addition to the logical sense of the interest rate being low. Right now, think about this from a lending standpoint. Do we have any lenders on right now?
Yeah, Debbie Chop's on.
Okay. So
I'm here.
Okay, so Debbie, let me ask you this question. And this isn't a scary question. If everybody, it's in their best interest to refinance right now, with interest rates being so low, what does the refi look like in about 3 to 5 years from now?
Yeah, there's no refis. That market's done.
There you go. Okay, so now here's something that really concerns me.
Mm-hmm.
You've got this word forbearance, okay? If you don't know what that is, you need to educate yourself really quick, okay? 2 is we've got potential defaults on mortgages increasing. Okay, so you add those 2 together, there's a little equal sign, and it equals what? Short sale or foreclosure. Okay, you also combine that with what? Job loss?
Just have seen my first 2 this week, Aaron.
What was that, Donna?
I've seen my first 2 short sales that people have called me about this week.
Interesting. So here's the thing. We're talking about all this good stuff, and all of a sudden now we're talking about short sales and foreclosures, which isn't a good thing. Okay, it does not do our market any good. It doesn't do our industry any good when we're talking short sale and foreclosure, because I guarantee you, if you're a homeowner right now and the next door neighbor goes into a short sale or foreclosure, you can't tell me that's a good thing for the value of your home. So let's get real on this and understand that one of the things that actually concerns me, though, is with our interest rates right now being at historic lows, what's different between today and back in 2007, 8, 9, or even 10? What's the difference between that time frame, if you were in the business, and today?
Interest rates got nowhere to go.
There you go. That's exactly what I was getting to. So therefore, back then, the bank could possibly negotiate an interest rate. They could lower the interest rate, so therefore the individual could afford to be in the home. Right now, people are getting into properties and they're kind of stretching it thin to begin with. Guess what happens? There's nowhere to go. So the only option is one of those 2 things potentially. So keep that in mind when individuals are looking at properties and they may be stretching themselves a little bit too thin, or you have a market shift and they lose their job. All of these different factors that come into play, and we're talking about prices potentially increasing due to the cost of goods, which is i.e. GDP as well. So we got to look at that stuff going forward and what kind of market are we currently in? Because everything's local, am I correct? You know,
People can't even refi right now. If you don't have a job, how can you refi?
there you go.
So if you don't have an income right now and you want to refi, that's impossible. So the next step is short sale or foreclosure. So unless we get people back to work, we're kind of hurting. So that's the next step. And that's what we have to be looking for and helping these people. And I think a lot of reason people don't want to sell right now, where are they going to go? I've had 2 people say, well, we don't want to sell because we can't find anything we want to buy. And by the time we find it, it's gone.
What's happening to rental rates?
They're going up. Well, first of all, the investors can't get renters to pay if they don't have a job. So they're hurting.
So there was another article that I was reading, actually, I think it was yesterday or this morning, talking about the impact of not vacancies, but renters still not paying their rent. California's taking a pretty big hit on this right now. So therefore, you know, there was no eviction notices, but however, I wouldn't be surprised if you start to see eviction notices on the increase here in the near future as well.
They're actually going through with the evictions on a lot of rentals. It's just up to the magistrate if they want to push it through. So there's going to be a big loggerhead when they finally allow them to be enforced. There's a lot of people in line for the evictions.
So let's just think about this. And here's the thing. We got a lot of brilliant minds on here, and we're not here to solve the world. However, what is the solution when they can't afford their rent and they get evicted and rental prices are increasing? Just think about that a little bit and understand that you know what, something's got to give.
Aaron, I'm on the board of directors for the Hearth Foundation, and our entire objective is to provide housing for low-income families. And we're working with all of the homeless foundations in Tucson to try and get housing built and provided. There's been a 33% increase in the homelessness population in the last 3 months.
Interesting. Yeah, something's got to get done sooner than later. So, well, let's talk about residential stats. How about that? I'm going to share my screen here real quick, and then therefore we can kind of go from there. You guys able to see the screen? Boom. Okay, I'm going to go into present mode here.
Yes,
just a moment. Maybe. Thinking. Boom. Okay. We went through that. All right, let's talk about new listings. Talk to me. New listings are up or down right now?
Down.
Down. And they have been for the last 4 months. So we talk about the inventory. The inventory is going to be coming up, but this is new listings on the market. Okay. I did put a red line in there. Use my school set skills there and put a little red line, as you can see. It's kind of a baseline of where we're at. So here's the thing. There's nothing too big here going on. This is actually kind of normal right now for the amount of new listings that are coming on. If you think about it, 1,300 new listings that are coming on. The problem is the inventory. We've sold out everything. So we actually need some of these homes to sit on the market for more than about 8 minutes, you know? That being said, that's theoretically why your buyers can't get into properties. We are actually starting to see, and I don't know if you guys have been experiencing this, a lot of different buyers sometimes will literally go out there and make simultaneous offers out there. So they'll go out there and put offers on, let's just say 4 different properties, and whichever one sticks. Think about the fact that if they had strong offers on all of those properties and 4 of them go under contract, now they got to cancel 3. So we've been seeing a little bit of a cancellation rate just quote unquote because.
Hey, Aaron.
Yes.
In Teresa's disclosure class the other day, she talked about this, and she talked about the fact that the multiple counter form that we frequently use when we're countering should also be used when we're doing multiple offers, but the majority of people don't do that and don't even think to do that, because then they may or may not go under contract for all those properties they're offering on.
correct?
Right, and we've actually seen some agents lose deals because they submitted a multiple counter offer form when they were doing that, and the seller said, hey, these people aren't that serious, and then pass on that offer.
Yeah. And so I'm just preaching what's going on out there on the street, whether it's right, wrong, indifferent, whether, how to get around that or et cetera. But bottom line is we've been seeing that as well. We've been seeing, offers, fall through. They weren't as serious as they thought they were. They wanted the property. They ended up getting the other property. It doesn't matter. There's so many different variables here. But my point is there might be a little bit of that buyer fatigue that's out there. Okay. Obviously being down 5.9% over last year at 1,346 new listings coming on the market. That's actually pretty healthy. I want you guys to understand that. That's healthy. That's actually pretty decent. If you go back and look at over the last, the last year, month over month, it's pretty stable. Now you go back and look at it year over year over the last, what is it? I can't even see how far back that goes. Back to 2009. Because 2008 was just horrendous, okay? However, you go back and over the last, 12 years, it's pretty stable. So there's nothing too alarming here. The one thing that I would look at is I would look at a little bit of a shift. And the reason I wrote that shift ahead is because the fact that right now we are literally looking at 4 consecutive months being in the negative. Sooner or later, the pendulum is going to swing the other way, meaning that we're going to have more listings that are coming onto the market. As soon as you see, and here's the thing for any I could have you raise your hand. Doesn't really matter. There's like 80 some people on here. If you've been in a shifting market before, one of the most complicated things is when the market does shift, the sellers don't understand it. It's like that gray area. They're like, what's going on? How come my home didn't sell in 8 minutes? The neighbor down the street did, and blah, 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 blah. Or they don't get a full price offer. They don't get multiple offers, etc. So it starts the denial stage for the seller. So just be prepared for that when the time frame does come, because it will be here before we know it, whether it's, sooner or later. But bottom line is there will be a shift in the inventory.
Aaron, I said something to Lindsay and a couple people on my team last week that just gut instinct. I was feeling that shift has started. There's fewer multiple offers on the properties. The properties aren't necessarily going in 8 minutes. They're taking more like 10 hours.
Gotcha. You know what? And I know some of you may know this already. What's the first indicator of a shift?
New home build stop building.
Well, you can also look at that. That's a big one.
Our days on market.
Okay, most people will say days on market.
Price reduction.
However, it's the offers that are coming in. How long? How many offers are coming in? Price reductions is another thing. Does anybody even know what a price reduction is right now? Okay.
List to sales ratio.
Yeah. Yep. List to price sales ratio. We're going to get to that. It's boring. Don't get me wrong. It's boring. It's within 2% of a full price offer. The only time you're doing a price reduction now is because of the appraisal.
Mm-hmm.
Let's just be honest. Statistically, it's because you have to. So I think what we have to do is we have to educate these sellers now versus later on, because then it gets emotional. And what did I just talk about? When emotion gets involved in a transaction, people react, and sellers react negatively when their home doesn't sell in a certain time frame that is expected. So just keep that in mind. Okay. Cool. Pending sales. So these are the homes that are actually under contract right now. The activity. So this pending sale is a lead indicator for closed sales. Okay. Yes, there's going to be a fallout ratio. However, I just talked about a little bit higher fallout ratio because buyers typically may have other properties that they're under contract with, etc. Other factors that can fall in line for fallout is because the condition of the property during the inspection period. They may find out whatever, that the roof is in bad shape. preparing your seller ahead of time by getting the inspection done prior to listing the property might be in the best, might be a good option for them. So therefore they don't get beat up during the inspection period. Now, granted, right now, there's probably 2, 3, 4, 5 buyers lined up. Okay, don't be scared to put in backup offers. I will say that. That's actually, we've had some pretty good success with that. What you'll notice here, that baseline again that you see right there, we're pretty much equivalent back to 2018. It looks like maybe March timeframe of 2018, having equivalent amount of sales, or pardon me, pending contracts. So we're literally, homes are going under contract. This is the third highest time in history that you can see that the homes are going under contract. So keep that in mind. Homes are selling, and they're selling quite well. Take a look at the bottom of the market. Typically, what month are homes not going under contract?
December.
There you go. Now, I'm not saying it's going to happen this December. However, if I was a betting man, I would think so.
Well, it'll slow down. It does every year.
Absolutely. Year over year. If you look back, and can you guys see my cursor? I don't know if you can on this.
Yes.
Bingo, December, bingo, December, bingo, December. Do you see where I'm going here? Every single one of these. Now, again, that's 12 years back. So therefore, what do you think is going to happen this December?
It's going to drop again.
There you go. What is today's business date right now for you?
End of the year.
It is actually, yesterday was Thanksgiving, ladies and gentlemen. 3 months ahead, 90 days from now is literally Thanksgiving. You are entering that time frame right now. From the activities that you are doing right now is going to get you the results in about 3 months from now. In my opinion, you need to be working on listings, listings, listings. Do not worry about buyers right now. Buyers they want homes. I get it. If you have a listing, the probability of it selling is very high. Educating the seller is going to be the challenge that you're going to be having right now. So right now, over the next 2-3 months, I would be double downing on listings. So therefore you can control the market, you can control your market share. Okay, but homes are selling, as you see. As you notice, do you guys see over here, June of this last, up 22%. Activity-wise. So your business should actually be increasing right now versus going backwards. If it's not, it's basically a wake-up call to go, wait, what am I doing? What am I not doing? Look at your business and find out what you're doing and what you're not doing. Because these indicators are basically all of the homes that are on the market. Okay? Somebody have a question there? Cool. All right, days on market. Well, this is boring. 34 days on market. It's bottom line is, let's just go back to 2012 timeframe. It's been under 60 days on market for quite some time. Bottom line is, we've been in a seller's market for a good duration of time. If you were in the business any time from 2012 and on, we've been in a pretty good little seller's market. Buyer's market was actually back in 2011, 2010, and I can go back further from that. But here's the thing. Understand that we have nowhere but basically up to go, as in towards a buyer's market right now. All indicators are pointing in that direction right now. Okay. Days on market is an indicator. Okay. It is an indicator, just like Jason Carlton had mentioned, on a market shift. However, this data is basically, 30 to 60 days old. By the time the home does not sell for, 30, 60, 90 days is when it actually goes into print. Does anybody right now have a listing that's been on the market? And it's okay if you do. Do you have a listing that's been on the market for more than 60 days? Anybody want to pipe up? I don't want to embarrass anybody, but do you?
Yes.
Okay. Okay. Can I role play with you here a little bit, or chat with you a little bit?
Please, by all means, because he is totally resistant on a price reduction.
Gotcha. Where's the property located?
West side of town, off of Camino del Cerro.
Okay, you're gonna have to get more specific. How far out on the west side?
4275 North Lightning Ridge Trail. It's near the Camino del Cerro trailhead.
Okay. What's the condition of the property?
It's actually in pretty good condition, great views. It's a little dated though.
Okay. Size of it? What's the size of the property?
Hold on. 3109 square foot and an oversized 3-car garage.
Gotcha. Price point?
$650.
Gotcha. All right. Have you ran price bands in according to anything between 500 and 700?
I'm sorry, say that again.
Have you run any kind of price bands, such as anything between 500 and 700?
We just put one down the street under contract that in the 750, 800 range.
Okay. Is that going to hurt him or help him in the comps?
I'd like to think it would help him.
Okay. It may just do that. Is it a time issue for him? Because here's the thing, 60 days is nothing. That's still a seller's market. Actually, 120 days is a seller's market. If they're willing to wait, let them wait.
Yeah, he is more than willing to wait. He was actually, it was an expired listing that I had picked up, and he's looking to downsize and hopefully find a flip, and good luck on that in this market, right?
Oh, yeah. However, here's my question to you. Why did it expire?
It was actually under contract, and he had some issues with the previous agents.
Gotcha. Okay.
Yeah, it fell out like right at the 11th hour on his previous closing.
Okay. So then is he or she blaming you for it not selling?
No, not at all.
Good. Good. Because if that is the case and anybody has any of those issues right there, that's what these stats are for. That's literally what these stats are for, is to basically show them what's going on and have them pick whatever they want to do in their comfort level. So I will say the 650 band right now, it is starting to increase in activity. Don't get me wrong. And it's those move up buyers. However, those move up buyers are having issues right now getting the amount of money they want out of their home because of the appraisal issues right now. They can sell a home, and they just got to sell it twice. They got to sell it to the buyer, which is typically no problem right now, and then they got to sell it to the appraiser. So keep that in mind as well. Cool. Days on market. Yeah, let's take a look at median sales price. So median sales price right now, we're looking at 271. Obviously, if you take a look over here on the right, 271, 250. That's the highest we've ever been. So that's a record right there. So I'm not saying it's unhealthy. It may be unhealthy for the type of jobs in the market currently right now. However, with the interest rates or where they're at, it's not. It's actually very, very affordable. So the affordability is actually there, depending on what kind of job the individuals do have. Where we're having issues is the entry-level homes right now. The price point on entry-level homes, and you just mentioned that on like a fix and flip. The margins are actually narrowed even more right now because of the cost of goods on fix and flips, and then also new home builds right now. So median sales price, this is actually a good thing across the board. We're still below the national median. And then if you take a look at this chart right here, and of course I'm going to go to the next slide, it's going to be the average sales price. And of course the difference between the two is, actually let me ask you this. Anthony Sotelo, I know you're on. And I know you're paying attention, my friend. What's the difference between a median sales price and an average sales price?
Unmute.
Hey, man.
Sorry about that.
You've been on Zoom for like 8 months now, bro. Mute button.
Average takes into account all the outliers, like for instance, the $5,000 piece of land or the $5 million house. Your median gives you a better idea of what's really going on in the market.
Okay. You know what? That pretty much sums it up. You're absolutely right. So median is actually a healthier indicator on what's going on. However, if you start to check your average price point, it can kind of tell you what kind of price points are actually selling more predominantly, such as, if you've got like an $18 million home that's in the mix, of course, your average is probably going to pop up a lot higher. Okay. However, it won't affect your median as much, hardly at all. So just keep that in mind a little bit. So therefore, as I hit this next screen, take a look at that, boom. Charts are pretty much the same. The only thing that I have a little bit of a concern with, not that it's too big of a deal because we had this happen before as well, is we have about a $20,000 difference right here between month over month. That's substantial, okay? We know that is not sustainable as well, okay? So just keep that in mind. If you were to ask me what's gonna be on the agenda next month, I would tend to think that it will probably drop back down a little bit, okay? Again, month over month isn't really the true indicator. If you take a look at a baseline from here and kind of draw a line right here, it's kind of hard to see this, but they were actually up, and then it actually tapers down and then back up again. So therefore, we're in alignment where we need to be. It's just that we can't continue to go up without it recorrecting itself to bring back into alignment, okay? So that's the hard thing for appraisers to understand, or not understand, to kind of show when they're looking at data that's 30 to 60 days old. They're looking at the same data that we look at. They have to justify the pricing that they have, not going off of what's going on out there. What are some, I don't want to say tips and tricks. I was talking to an appraiser a couple weeks ago, and we were talking about this pretty in depth. What are some things that you can do as a listing agent to help potentially bring value into the property?
Have an entire package of information with comps, any repairs, any upgrades, any modifications, receipts for the work done, and build an entire, here, Mr. or Ms. Appraiser, this is what's been happening with this property over the past few years while this owner's been in it. I've got this situation right now. The house that I just went to contract on has $48,000 worth of upgrades that were done just 3 years ago. The big one is $18,000 worth of solar. That's making this house, on paper, one of the more expensive homes in the neighborhood. So I'm going to have to justify where our contract price is with as much information of comps and the upgrade information and receipts from the work and stuff as possible to hopefully get the appraiser to truly understand what the value of the property is.
Larry, I think you nailed it. Seriously. You've got to be able to justify this stuff if you're a listing agent right now instead of just waiting for the appraisal to come in.
Yeah, there'll be a whole report put together.
I'll say this, guys, and some of you may think this is rude to say, just do your job. Okay?
Also, Aaron, if you represent the buyer and the buyer and the seller really want to get this thing sold, help the selling agent say, hey, look, why don't we get this information to them so they know? Don't just wait on someone else to take care of it, because if they're not up on their game doing what they're supposed to do, you do your part for your buyer and say, let's list everything, let him know we had multiple offers, blah, 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 blah. So be proactive and getting with the other agent. They may not be doing their job, but you do yours.
You're right. And that's the thing is, in that time to do that, have that conversation, quite frankly, is up front in the beginning at the listing presentation. Hey, listen, I want a talking sheet. I want everything and anything that you've done to this property because I'm going to squeak out every single penny that I can for you. However, we need something to kind of show for this. I've already got the comps on your home on paper. Heck, Zillow's got your number. So we want more than that, then let's go ahead and sit down and figure out how we're going to justify that. So that's one of the ways to potentially do that as well. Okay, so let's talk about new home builders a little bit there. Every time a new home sells, isn't that the latest comp?
Yep, because it becomes part of the resale inventory.
There you go.
Potential resale inventory.
So what do you think when the appraiser goes back out? What do you think they're going to use as a comp? The last home that was sold in the neighborhood. It's equivalent to it. Most home builders have what, ballpark, 6, 8, 10, 12 different models, or not models, but homes to choose from, styles to choose from, layouts, floor plans. Okay. So therefore, they're going to typically take the comp from the property that was just sold. We all know this. If you moved into a new home subdivision and you bought a 2,280 square foot home, and you see one that sells down the road 8 months later, what do you literally do in your head? You match that number to what you purchased for, and the difference right there is what happened to the value. We all do it. It's human nature. Now, what's the last thing that a new home builder is going to do, though?
Lower their price.
Why would they lower their price?
They can't, because it ruins the comp of the sale of the house they're building.
There you go. So they want values to go up. So what can they do? What can they do besides lower price? What can they do to offset that?
Incentives.
Appliances.
Incentives. Yeah.
Appliances, pools,
Upgrades.
discounts for using their, yeah.
How about not charging as much for a land lot? Don't get me started on that. Don't get me started.
Land premium.
Yeah, you can't buy a house without the land, right? There you go. So, and then not only that, but here's the thing: how often have you guys went to a listing, a resale listing, went to list the property, and go, okay, you know what? This home down the street, so the exact same floor plan sold for, $385, but you know what? Yours has got a lot premium here. We don't do that on the resale side. It's already built in. We're going off the comps. We're going off the numbers that are literally there. We'll take a look at the amenities, don't get me wrong. However, when the comps come in, they come in. Okay? So the average sales price?
Aaron?
Yeah.
Can I ask a question, Aaron? Because so many people on the lower end homes are winning by paying cash. How much do you think an appraiser considers cash compared to the ones that they were financing with paying for people's closing costs and all that? Because in theory, I always feel like, oh, great, a cash buyer just brought the price, the average is up. But do you think appraisers look closely at that?
You know what? That's a very, very good question. And for me to answer that, I don't know. I don't know the answer to that, to be quite honest with you. I would tend to think if you're looking at, I'm going to say the reason, what's the reason for the appraisal to begin with?
Lender to give you money basically.
To validate.
To protect the investors.
Yeah.
There you go. So, and who's the investor?
The banks.
There you go. So
stockholders of the bank.
They're there to protect the bank. So therefore they're lending money on something that has the value that is there. So when you're dealing with cash, and an appraisal is done, who does the appraiser theoretically represent?
The buyer.
There you go.
Yeah.
Yeah,
and some of them are doing it without appraisals right now. They're
Correct.
just saying, no, I just want a house. I need a house.
Well, I'll give you a personal story. I literally closed on a home with my daughter. She ended up buying a home with me as well this last week. Bottom line is we came up with a ballpark list price. However, it was hey, look, we'll get 2 appraisals on the property. And whatever the appraisals come in at, that's what we'll go ahead and go with, So therefore, it's a third-party piece that comes into play. So therefore, there's no emotion. Remember the emotion piece, right? Take the emotion out of it and just deal with what is there. Now, when you're dealing with cash, obviously, if somebody's coming in to purchase a property on the lower end, bottom line is, what are they purchasing it for? If it's an investment property, investments are there to make money, right? So you either buy low or you're looking at your cash flow, okay? So therefore, you got to take a look at that as well. If you're buying long-term holding and it really doesn't matter and you got a loan on the property, you know what? $1,000 is literally about $4 a month. And the majority of that's going to be a tax write-off anyhow. And no, I'm not a tax advisor. However, you got to look at that. So
Aaron?
Yeah.
Can I just contribute something? I've actually used the appraisal on the buyer side, when the comps, for example, don't support the list price, right? And we've come in with our offer and it's been accepted. I've done it a couple of times now because the buyers obviously get really, or have been nervous about that, right? Because we've come under. And I've just showed them the data, right? Like this is just the information. And I've indicated that when the appraisal comes in, then if it's where I believe it's going to be, right, just based on what we know right now, we can actually use that to then essentially renegotiate, right? And that's exactly what has happened. So the appraiser isn't always the boogeyman, right? And that information isn't always negative. What I tell my clients is that this is a negotiation till the very end, right? Until keys are handed over to a client, it's a negotiation. So making sure, to your point, in terms of us just doing our job, right? We have to continuously look at the information and the forks in the road that present themselves, because inevitably that's what happens at every point of the contract, right? It's a fork in the road, and the information that we are given and the information we gather, we need to use to maintain our client's best interest.
Correct. I will say this, and then we'll move on. Appraisals are only good for that one day that it's done. Get over it.
Or for 6 months.
It's only good for the value of the property on that day, and not for 6 months. It's only good for that day. Because if another home comes on the market the very next day and sells for $80,000 less, and you're talking about $350,000, that's not in the comps. See what I'm saying? So it really doesn't matter. So, all right. Housing affordability index. Yep, we're low. We're low nationwide, which is a good thing. That's probably why we're seeing a lot of people flock here as well. Kind of come here, retire. Depending on where they're coming from, whether it's California, doesn't matter. They're selling their, matter of fact, we got an individual that's moving here. We were on our call earlier this morning. They're moving here from Vegas. But literally, you sell a $800,000 property out there, and then you move here and you can get 3 of them for that price. So literally, so yep. Thought I heard somebody. All right, cool. All right, and then inventory of homes. So this is the one that's actually pretty interesting here to me. Yes, we're at a very, very low inventory on the resale side. We're at historic lows, obviously, at 1301. The scary part about that is starting back in, March.
Yes.
We've literally dropped every single month in inventory.
At a pretty alarming number.
This right here, from right here, looking from March, that's substantial. Now, it doesn't mean that we don't have homes to sell. We do. They just have a new home builder sign on it. That's all. So therefore, for whatever various reasons, if you go back to this time frame, or even go back to 2015, we have almost 3 to 4 times the amount of homes that are on the market. Does anybody ever remember basically you bring up a plethora of different homes and your buyers are literally want to look at 800 homes in a weekend? A little bit different today. They look at, they don't have 800 homes to choose from. They have 8, So
I think that's contributing to the dropout also. People get into this competitive bidding mindset and they want to win the bid at all costs, and then they get into the house and realize that the house doesn't work for them and walk away.
Yeah, we're starting to see a little bit of that as well. Month supply of inventory, again, it's dropped. A normal market, and I say normal, balanced. How about that? Balanced market is anywhere between 5 and 7 months of inventory. And what are we sitting at? 1.1. So that's what you're feeling. But we felt it all year, literally 2 months of inventory. If you go back up to here, 2 months of inventory. Now we're at 1.1. I really, truly believe it can't go much further. It really can't. Meaning, if you take a look, just like a clock, the pendulum is about to swing to the other side. And I truly feel that that is a lot healthier of a market than what we're currently in right now, because the emotion will actually subside a little bit and logic can start to set in. Once that happens, though, watch out for interest rates. So, anybody have anything on this supply of inventory?
I have a question.
Yeah.
When you see that shift happening, do you think it will happen really quickly or gradually?
Good question. Good question. You know what? And to be able to determine that is nobody can tell. However, I truly feel that we're starting to feel it right now a little bit. Meaning, when we start to see these dropout rates, of buyers, when we see, builders stopping build because of the profits, that's literally some of the indicators that are there. And then we're also heading into the winter months, what happens to our inventory, in November, December? They go down. So therefore, that's another force that's pushing against it as well. But what we do know is new home builders that have already drawn permits, those homes literally are there for sale. So here's the unfortunate thing there, Anna, is when a market shift happens, the last person to understand it is the seller. Those that are doing a lot of volume and understand, and they're the ones feeling it, and it's kind of a little bit of a confusion state. What's going on right now? The best book ever on this topic is the book Shift. If you grab that book, please read it right now. Even though you may not feel that you're in a shifting market, it's being able to set your business up and understand that, we already talked, we had two words that we talked about, short sale and foreclosure. Not saying we're going there. However, I would definitely take a look at some of that stuff on how it operates, because again, we had somebody said that they had 2 of them they saw recently. So
Got it. Thank you.
hopefully that answers something of that nature, but yeah. All right, this is a kind of a recap on everything from the residential side. If you take a look at the right-hand side, year-to-date 2019, so this is only of the last 7 months since through July. As you see, we've had a increase in median sales price, and then we have an increase in average sales price. You combine the two, take a look at that. The only difference is what, 0.2. However, that's basically for half the year. If it's sustained for 6 more months or 5 more months, you're literally looking at basically a 14% increase in value. That is definitely not sustainable. What is typically a healthy increase on price point? Anybody have any clue, percentage-wise?
7.
Somebody said 7?
3 or 4.
It's theoretically anywhere between 4 and 6%. Okay. 4 on the lower end is actually a lot more sustainable due to the fact that you've got a lot of different factors that are in play. You're looking at appreciation, your cost of goods going up right now, inflation. The only thing that's not keeping track with that is what? What's not keeping track with this pace right now?
Income.
There you go. Your income levels. Did your income? I don't care, anybody that you know of that's got a salary position, did they get a 7% raise over the last 6 months?
No.
There you go.
No.
Now, you combine that with a year. Over a year, you got a 15%, 14%, increase. That's the problem. It will outdo itself. So, so for the long run, it looks pretty decent right now, as long as we stay stable and we don't, inflation doesn't kind of hit us pretty hard. New home sales. And I know Stormy's on right now, so we're going to see how well he can read. The highlighted version, if you don't mind there, Stormy, if you can kind of read that a little bit.
Yes, no problem. Says that you're talking about percentage change?
Go ahead and go to the right-hand side where it starts with new home.
Oh, okay. New home recorded escrow closings were up almost 18% over last July and almost 17% year to date, reflecting a return of solid business for builders and their allies.
Okay. So we all know that the builders have actually hunkered down and started building. How long ago do you think this was in the mix for them?
A year ago?
Yep, over a year, definitely over a year ago. So they had to buy the land, then they had to get permits, and then once they get permits, that's their intent to build, and then they built homes, and then however long it takes to sell those homes. How long does it take to sell a new home right now?
Not much.
There you go. That's my point. So the demand is there. The supply is there if they've got the permits that are there. They have no problem with that. The problem is keeping up with the amount of demand due to the resale side of things right now where it's down. Okay, so take a look at this here. You guys, everybody should have a packet. There's also, I believe it's in the chat box as well. So take a look at the stuff and kind of understand the difference between the two and understand how they blend together as well. Okay, so go ahead, Larry, do me a favor, go ahead and read that, please. Got that radio.
Home builder confidence is demonstrated in the track of new home permits as we see the drop in permits activity as COVID-19 hit the nation, and then the rapid recovery in the Tucson marketplace as builders registered their local market confidence in June and again in July.
Okay, so if you've been in real estate for the last year or 6 months, we went through this. In March, this is when COVID hit. Okay, statistically when it hit, when things got shut down, let's just say that. As soon as that happened, what happened to permits the following month?
Yeah, they pulled them back.
There you go. So here's the thing. I'm not saying that they were scared, but there's a fear base right there going, whoa, 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 whoa. Let's slow down a little bit until we get a grip on what's happening here. And so it literally took a month, and then they're back above the level of where COVID was at. And then what happened?
Yeah, once they saw that the COVID was not having an effect on the market, they went, let's go.
There you go. So this is pent up demand right here. Now, we're going to get to permits on what's happening to permits. Permits are still happening right now. So the confidence level is there for these builders. Do you not think that these builders are out to make money? Yes, they are. 2, do you not think they do a lot of research? Okay, prior to building? Yes, they do. Look at what they're doing, and maybe you might want to mimic what they're doing. Okay? Closings by month. So here's the thing. If you take a look at this right here, and when you have an increase in permits and you have the demand, what do you think is going to happen next month with closings? There you go. I see thumbs up. Okay? So that's an indicator. That's your crystal ball that you have. So there you go, ladies and gentlemen. We're going to see more home sales in the new home builder arena than we ever have before. Okay?
Well, I think the alarming statistic from last month was that the volume of new home sales exceeded the resale market last month.
You know what? That's a very good point. And I'm gonna bring that up again if somebody wasn't on the call last month. So, and it was not in this month's stats. So there was I did write it down, but anyhow, it was like
638 million.
638 million in volume at the new home sales sites.
Where we did like 543 or something like that.
We did 511. Meaning there was more volume being sold at new home sale site than there was in the resale. Not more homes sold, higher volume, which means a higher price point as well. Make sense? First time in history that's ever happened. I wish they would have put that into the stats this month to see where it's at now, because here's the thing, I think that's even broadening the gap. And the reason I say that is because we're seeing an increase in sales in the new home versus increase in sales in the resale. We saw that it was pretty stagnant. It was kind of a boring graph that we saw. So therefore, that being said, that's where your listings are at, ladies and gentlemen, is the new home builders. Get out there, understand that product, understand it inside and out, what they're doing, what they're trying to cater to, what incentives they have. Get out there and do that. Okay.
Can only underscore that with one more thing. When the new builds are all, volume exceeds resales, that's 6,000 real estate agents dividing up $511 million worth of volume versus 20 home builders that are exceeding our volume.
Yep. It's an astonishing number. Astonishing. And I don't want to, see how I can word this without sounding derogatory. So then why does a new home builder need you?
Well, that's the other scary part. At what point are they going to shut us off?
Mm-hmm.
They did it in 05. They'll do it again.
That's, it scares me because I think that's coming.
You ready? Concentrate on your value to your client. That's what you need to do. You need to know that inventory of the new home sales. That's how you do it. Okay. All right. So therefore, percent change in new home construction here. This is actually a newer graph that kind of gets plugged in there. Okay. Anywhere between 20 or actually, yeah, let's look at it, 20 to 40%. Your median's right around your 20% baseline there. Nothing new there. It's all over the board. Tucson area resales by month. As you notice, they've had more resale activity recently. And actually we have increased in over the last 3 months. That's why that's circled on the resale side by month, which means if we don't have more homes coming on the market, which is the newly listed, this number will literally have to go down because there aren't any homes to be sold. So you guys are doing a great job at selling those homes. We're doing a pretty, not a poor job, but we're not showing the value on why somebody should maybe sell their home too. Okay. Now, let's talk about that just for a second. I'm not a tax advisor. However, does anybody know anything about the 2-year, 5-year capital gains piece? Anybody want to explain a little bit about that? Because I truly feel in about 2 years, 3 years after somebody's had an investment property for that duration of time, they're going to have to pay the capital gains if they moved out of their property. I think that's when we're going to get a flood of new homes on the market. That's just me saying that out loud right now. Anybody know what that is before I explain it? Sean, do you want to explain that?
That you have to have lived in the home for 2 out of the last 5 years to avoid the capital gains tax.
There you go. So the advantage of that, and let's think about this from a California perspective. Has anybody ever had a California, somebody from California moved to Tucson and they got to buy because they're doing a 1031 exchange?
Yes.
Oh, I heard a yes. Who was that?
It's me, Daniel.
Daniel, okay. Why? Why did they have to buy?
They sold an investment property and they had to take that money and purchase another property to avoid paying the tax on it.
Okay, so let's just do some raw numbers, okay?
They have to buy something of equal or greater value to offset the taxes in a 1031 exchange.
So before we go down too deep in this little rabbit hole here, let's just say $200,000 gain on the property. They're gonna have to pay taxes on that if they don't buy a property, correct? Let's say a 25% tax bracket. How much are the taxes now? Simple math, people, 50K.
50,000.
Okay, so they're gonna have to pay $50,000, or they buy this property for $225, let's say, I don't know, $250. Do they really care if they're spending $5,000 to $10,000 over asking price?
It's gonna save them 40.
There you go. That's the simple math, ladies and gentlemen. And now let's fast forward 3 years from now in Tucson. See my point? That's looking at it from the future aspect instead of what's going on today. So anyhow, that's a totally different topic, totally different day. That's the kind of stuff I dig. All right, somebody, I'm going to go ahead and read this. New home prices continue to be on the radar on National Housing Analysts, with many forecasts for both rising prices due to increased builder costs. Did we not just talk about that? And also moderating average and median price in some markets as builders reposition their products to appeal to less affluent buyers and entry and move down buyers. That's what we need. That's literally what we need right here. We don't have the inventory on a new home sale right now for first-time buyers. So keep an eye on that, because whatever builder does that and is able to make a profit on that, that's going to be a very good move, in my opinion. All right, almost done, ladies and gentlemen. So therefore, we're going to look at reposition their offerings toward more affordable products, just kind of what we talked about. We expect this trend to continue, especially among the national or major national builders who seek volume and market share increases. I think it's a very good move. Median and new home sale prices. Take a look at the difference there. What is the difference? Anybody? Anybody? All right, how about 60K? What was it about 8 months ago? Does anybody remember? The difference between new home builders and resale was over $100,000 difference. So that being said, they're starting to come in a little bit more into alignment, FYI. Difference, there you
Is
go.
that due to the increase in the value of the resale homes has gone up?
That, and they've literally kind of capped out on the new home builders as well. So they slowed down on that, but they've increased on the resale side. So the difference is actually 69K. Understand the difference between that and why, okay? This is in different areas of Tucson with growth, as you'll see right here. No brainer, Southeast and Marana. When you take a look at a map, it's kind of spread out that way as well. I really don't like this chart because depending on how you look at a map and depending on, especially if it's an MLS map, it's all over the place, guys. So I'm really not too fond of this, but I put it in there just because they distribute it as well. This I do want to talk about a little bit here. The top builders right now, top 10 builder permit rankings for July. This is just 1 month. Was who? D.R. Horton. And then the closings was D.R. Horton. However, look at where Lennar's at right now for permit rankings. Third, fourth, fifth, sixth position right now. And they stopped doing permit. They stopped building. So what does it look like it's going to happen next month or the month after? They'll pretty much drop off the radar a little bit. Okay. However, this breaks down into the subdivisions right here. Okay. That being said, oh, I know that there was one more slide and it's not here. Okay. Regardless, the new home builder right now for the closings that are happening, D.R. Horton is actually off the hook right now. They're 3 times the amount than any other builder right now. So they doubled down on their permits. So don't be surprised in the next 3, 6, 9 months down the road to where you're going to see D.R. Horton signs everywhere because they literally bought a ton of different land and have the permits on it. This is the landslide as you see right here. This is the hot spot for the future of where land is being acquired for new home build, which is where? Far west side.
Star Valley.
There you
What
go.
is that? What is that?
Star Valley.
Yep.
Hey, Aaron, did you mention the drop on Inman for D.R. Horton and their partnership with Zillow? And
yeah,
so that's an interesting piece of the puzzle that's going to be popping up here soon.
So talk a little bit about
that.
There was an announcement that there was a partnership between Zillow and D.R. Horton that if you were buying a D.R. Horton home, new build, Zillow would purchase your home from you and allow you to live there until your construction was complete.
How's everybody feel about that?
Be aware of that.
How's everybody feel about that?
It's basically.
That's not something. Oh.
Go ahead. Who's that?
Yeah, this is Rachel. I've lost a few buyers with that where they were going to list their house and then they walked into a new construction and the agent said, you can't use an agent. We'll buy your house, through Zillow. Doesn't matter how long it's going to take to sell. We'll buy your house and you can move in. Even with COVID happening, they still backed it up. So it's been happening. It's not new.
Yeah. iBuyer was the same concept. So.
Yeah, exactly.
Yeah. So again, another reason to create that customer experience for your clients and understand, where you want your business to go and how you can strategically bring value to your clients. Anybody have anything whatsoever?
Yes.
Hey, Aaron, before we take questions from the group real quick, because we can continue on the mastermind. If you're part of this, but you're also part of Ignite, now's the time. Click on the link that's in the chat box, move on over to the Ignite portion. If you're not, then let's stay here in mastermind, but now's the time to go. Thank you. Go ahead, Larry.
No, I'm out. I wasn't saying anything.
Anybody have anything? Somebody had something.
I got a question.
Yeah.
That hot spot that you're seeing down there in Star Valley, Do you think that has any correlation to the potential of Interstate 11 coming through?
Good. I'm sure that has some factor in it.
It has a lot to do with affordability. Star Valley, the land is cheaper, and they're building homes that people can afford. They're under 300,000 in many cases.
That makes sense. Has anybody else heard any rumors about a Walmart or a Tangier style outlet going in near the casino out of Valencia?
You could ask Bob Ditko. He usually knows all the things that are coming on as far as commercial.
Okay. Yeah, I'd heard some rumors about that the tribe down there was going to be in control of it. So I didn't know if anybody else had heard that rumor as well.
Yeah, I agree. I think Bob Ditko's got a pretty good pulse on what is going in from a commercial standpoint. Also, Tom Heath is another individual that you may want to chat with as well on that. I don't know how much he's into the commercial. He's more downtown area and the growth of the urban development down there.
And it sounds like this is similar speculation to what was supposed to happen out towards Benson. There was supposed to be a huge commercial complex, malls, cars, homes going in down there in 05, 06, and it never transpired. The market turned before the investors could really find value in it.
Who else has something? You can't be just Daniel. Anybody? Derek, what do you have? Derek DiCamillo. I know you're paying attention. What do you got? Derek is not paying attention. So anybody else have anything whatsoever?
Thanks, Aaron. Thanks, everybody. Y'all have a good night.
All right, then. On that note, I'm going to get back and do what I got to do. And then you guys have a fantastic week. And thank you guys for doing what you're doing. And then have a wonderful week.
Thank you, Aaron.
Later.
Thanks, Aaron.
Thank you, Aaron.
Thanks, Aaron.
Thanks, Aaron.